Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, August 2nd, 2022. Getting this one out later than usual. I started to work up some charts this morning, but then decided, I was going to take the day off. Haven't had a day off in a while, so I went out to run some errands. Figured I'd come back to the desk and never made it. Just kept knocking a lot of stuff off the list, and so just getting back to the my desk now and want to do a brief update. Really, one of the things that was I was struggling for things to look for. There were some developments in the precious metals. I'll cover those. But other than that, the equity markets are where we were on Friday. I told you on Friday, this was significant resistance here. This is the daily chart of QQQ. That level is about 317 or so, 317, 318. And also for the reasons on the 60-minute chart, some divergences and all that. And that's it. It's a very slow roll so far. We're not can't call it a roll, but a little bit. You can see we went up, peaked on Friday. I'm sorry, yesterday, and then a little lower high today, and a little lower low. So moving a little bit lower. I still looking for a pullback there, and then nothing's changed for my more intermediate term. Still looking for another leg up soon. Quite likely a final leg up to that downtrend line off the highs right there. It's really not the high. The high in the Nasdaq 100 was back in November, but then we had a second nearly equal high back in late December, about the time the S&P peaked, and so you have a similar or comparable downtrend on the S&P 500, and you've got the 200-day exponential and simple. So that's my bounce target range, but I still think we do that. So I'm sticking with the shorts that I told you I took home on Friday, and reiterated that yesterday. Nothing's changed, and so again, it was pretty much a flat day, down 0.3% in QQQ. SPY, similar setup here. There's your downtrend line. So I actually should clarify. Oh yeah, there it is. It's a little higher on SPY, but again, SPY is not my trading index. It's the at times I'll trade it, but mostly I'll go with these small caps or the Nasdaq 100 or a combination of both. So the potential comparable target there, again, just to kind of reiterate this stuff I've gone over quite a bit. Is that 428-ish, 429 level right there, and the downtrend line, which comes in together, and it comes in right around. There's the 200-day simple moving average. Exponentials a little above us there, right there in red. So that's it. Nothing's changed in the indexes, but let me just zoom down to the 60-minute chart and make sure, if I haven't covered this, one of among other things, or in addition, I'm sorry, to price resistance at around 416, which again, you get that on SPY, that area of consolidation there. You have quite a few key Fibonacci levels coming in here. Here's the 50% Fibonacci retracement level, right where that line is there, and that is off this peak high down to the lows. And then let me show it on QQQ, because again, that's the one I'm more so focused on. Here's the fibs. I've got them up here somewhere. So you have a nice fib cluster. Fibonacci cluster is when you have one or more key Fibonacci levels, and what you'll do is you take them off key reaction high. So there's the December high in the Nasdaq 100 down to the low. That's what's measuring. And then this major, we had a counter trend rally right there, so there's a major reaction high. And you can see right here, well, you probably can't see it in the video, but I'll read it out to you. It's the 50% retracement of this move down, this one here to here. That's a key Fibonacci level, and the 38.2% Fibonacci retracement from that peak high right there, and back in November, the all-time high in the Nasdaq 100. So again, price resistance, fib resistance. And so far, really, again, we're correcting more so in time than in price. We haven't gone down much. And so, it's not an all-in short moment. It's just one that I think there's going to be a little more downside. And then just to reiterate once again, if you are catching up, the targets that I laid out, if this pullback gets a little traction going, 308, again, these are your actual support levels. You want to cover above the one that you're targeting, or ones if you cover, some traders scale in, scale out multiple positions, some actively trade off those levels. 308.83, 305.41, and then 296.35, which is going to come in my max target all along has been and still is this uptrend line. So if we hit that level, so if we get to the uptrend line, by the time we get there, it'll look like this. We'll probably come in right there, and that was a big level to me. We had this boom, boom, boom. I referred to it as an ascending triangle pattern back there. We had a breakout right there. We back tested it successfully. And so that's like a magnet. If we do pull back, that's where no guarantees it'll hold, but very, very good chance the buyers will step in there at least for a tradable bounce or some type of reaction. And it's possible we never get there. These divergences are not the best. You made a slightly higher high in the RSI recently, and about equal highs in the PPO, but divergences nonetheless. So that's it. Nothing's changed there. And, I talked about risk reward as well, meaning that upside potential from where we're, Friday's highs, yesterday's highs, today's highs was only about on the NASDAQ 100, about 3.5% above us. You don't go straight up in a day. So that's why I usually, to calculate, projecting that if it took us a few more days to get there, that's about 3.75%. So again, not a lot of meat on the bone. I think we stripped a lot of the meat on the initial runoff here, and so that's my preference is to, close longs, try to game a little short pullback trade here, and if it doesn't pan out, so be it. But I still think at best it's going to be tough sledding for a little while. I don't expect the same rate of ascent that we've had recently, and we're seeing that already. The market leaders, Apple, Microsoft, Amazon, all running into or very near big resistance, like Apple on the daily chart here, backtesting that key trend line. Microsoft, 200-day exponential moving average, big trend line price resistance just above. Alphabet right there, and towards the top of this trading range. If my lines populate here, usually if I click it, I'll get them to come like that. This trading range here, we're getting towards the top of that, and then Amazon, of course, hitting that big 135.34 level, which was also the third and final target. And here's a great example of why suggested taking profits when that was hit. And this is what a reaction looks like. I define a reaction as a pause and or consolidation. Always say stocks can correct in one of two ways: time and or price. So far, this reaction, it's been a reaction because you were headed straight up. That's a gap. And then I use the analogy. It's like throwing either a beanbag sack or a hacky sack into a wall, a brick wall, or a tennis ball. You're going to have a reaction on both. You have forward velocity, the same exact forward momentum in both, but the beanbag's going to kind of hit and stop there, and then the tennis ball will bounce. And so either way, it's been dead money since we hit that target, and that shows you how well defined. Again, it wasn't minimum or mild resistance, it was major resistance. Doesn't mean we can't go through there, and if we do, just like Apple, you've got a big primary uptrend line to backtest, and that's just as significant resistance right there. So if Amazon can power through, but I think we'll get that pullback I'm looking for. I still do, and then backfill some or maybe even all of that gap. And if that happens, let's just say we come back to the top. The technically speaking, the top of the gap is right here where you close the day before the gap up. But in a case like this, I would much prefer to put a line right there at 125 and change. You have a reaction high there, that reaction high, and remember, it's what I had talked about before. This was a basing pattern here in Amazon. So the breakout in itself is powerful and bullish and all that, but I think Johnny come lately longs piled in there, and the market doesn't make it easy for them, so they need to be punished, shake out the weak hands, and then come on down here, and that would be an objective long area. That's where I'd be interested in buying back into Amazon and covering any index shorts if I'm still short at that time, the NQ, and reversing. And if we make a full back, fill the gap, no big deal. It's not much lower. And if we don't, then it just shows us pretty voracious appetite still in the market. If they just have a few days of consolidation and then powered by the next leg up, again, it's just showing that there's a lot of buying pressure in the market. Not my preferred scenario, but and again, if you're short. If you short Amazon, you're talking it's only another 6%, 6.5% up, and from this trade, multiple opportunities, we already milked it for 30. If you sold the highs, I didn't, but if you sold it right at T2, it was good for over 30% off these multiple entries there. So, you can turn around short if you're willing to ride out at 6%, but the risk reward's not great. Like I said, I wouldn't. On this particular one. This is one of the crowd favorites, big market leader. No reason to short this until we, at least not at this time. Let me just leave it at that, unless you want a quick pullback trade. And I know I'm rambling, but if you were to, I would just keep the stop tight. It ran into the 200-day exponential moving average. We had 3 tags there, just above those recent highs. You can make a case for that short. What I was getting at, I wouldn't give it that much on the stop, 7%, because to do that using a 3-to-1 risk reward, you're looking at then a move down below. 7% upside means you're looking at 21% or so downside, and that's going to take you way down here. I don't think we're going that far. Certainly possible, but not my preferred scenario. All right, let's move on from that. Let me just cover natural gas, crude oil, and the precious metals. I'll start with the precious metals. Let me go there. Okay, here's the charts I was working up this morning. You probably notice I always timestamp all my charts and videos. When things are taken on the screenshots. This one I started. Actually, was it a little before that? This was, some of these were taken a little bit before that. There we go. All right, so I started to work up all the precious metals for you, and again, just decided to cut out because it was just a pullback trade I was looking for. 7:49. Yeah, it's about an hour and a half before the market was open, and that was just to point out. And again, it hit it yesterday. Man, this was taken this morning in pre-market. If you look closely there, you zoom in. See that little white candle right here? We were there. I was just pointing out that we hit my third target on platinum yesterday and again this morning, giving you plenty of opportunity to get out of that. So that's really not anything new. I also did an update there when we were at T2. We just had a little more upside, and so that's it. Let me see what it did since then. I know they all pulled back. PPLT, that's what that was, the 60-minute chart. And then we were using this board here, and there it is. So T3 was hit. There's another example. You had T2, you had one opportunity to get out before the pullback. T3, you had 2 opportunities, including this morning in pre-market and after the market opened. There's the opening candle right there. And from the high there, it popped it slightly, pulled back 2.5%, and it's coming up trend line support. And this is one reason I'm doing the video now. Since I didn't get anything out to you today, is that I think this is probably it for the pullback. I think you can, if you're trading after hours, futures, I guess at this point, you can get back into some of these things here. PPLT, and then what were the other ones? Let me go back to that chart from this morning. This one was PA. It's just cut off in the screen here. No, that's not going to work. It's going to snap. Hold on one second. Let's see here. Okay, I got to adjust it. I'm doing this as a small part of a 43-inch monitor that has multiple windows, and what happens if you move things around, it'll fill the whole window. So I was trying to get in there and just show you. This is PA. Again, all these were this morning, 8 o'clock in the morning. Negative divergence continue to build on the 60-minute chart as it tests this previous reaction high right there, and have it coming back to right here, 288, about 289 right there. and it did. These played out, but again, these were just pullback trades. I still think there's another leg up, and that's why I'm doing the video. I hate posting hindsight stuff. I should have, again, I just didn't feel like getting the post out and composing everything. Took that opportunity to leave, and then just never made it back to my desk. But that's that. Oh, it was right there. We actually overshot it. But there's the next level. There's support right here. Now there was a pretty significant negative divergence. This one I would not buy back. That one I think could have more downside. It doesn't look like a bottom to me. Gold and silver, I think a case can be made here. Wouldn't go in heavy, but I'm going to show you those in a second. In fact, let's just roll on to that. So that's what happened. That since this morning, it was a pretty big reversal in palladium, but that's palladium for you. If you trade it, I don't have to tell you, 7% drop. So coming up on support, and next support about 2008. That's where that one, I could see that one easily going down there, maybe even that 1955 level, but again, I'd just stay away from that one for now. What were the other ones? I was going to give you gold and silver as well. Silver, again, all these taken at the same time, a little after 8. And so what I said here is, again, these are targets that are laid out. So this isn't really hindsight stuff. I gave you, this was my way back here on the divergent low, my swing target, my preferred near-term, what I call near-term swing target for silver. Silver futures SI, we're looking at a 60-minute chart. That level's 2068, and you can see we effectively hit it. And it wasn't a full hit, but I always say this, and I say it over and over again. These are the actual resistance levels. You want to sell a little below, because quite often if everybody sees them or enough traders see them, like myself, they'll step in early because they don't want to miss a reversal. And so it effectively hit it there. And so this morning I said, look, maybe you can go up for a full tag of it or a brief overshoot. So my words were maybe a hair more, maybe not close. However, bottom line, close enough to that 2608 target to book profits or raise stops, and showed it, going down here. And this would be a max pullback target, and it still could get hit, but I think we're going to get a bounce first. Here's what I think is going to happen. And again, that was this morning. I'll get to this updated chart, but I also have this pretty good divergence. So I think it'll zigzag like this. Let me show you the updated chart because this may be timely for you. So that's about where I had the arrow drawn down. This is live again. The other one was from this morning. And that's about exactly where we were. And of course, we didn't get there. Like I said, maybe not close enough. Why eke out? Why risk? Again, if you hadn't sold, and you're targeting this level, and you came that close, and you were that close again, and you can see these divergences building. Is it worth it to hold out for an extra? I don't know what it was. And silver moves a lot. I can measure it for you, but let's say it's less, probably less than a percentage point. And yeah, I can't even, so small I can't even measure it there. And so that's it. So there's a reaction right there that probably, here's my guess. I'll tell you. I think we'll probably bounce right here, and I'll show you why. And maybe run up at that level again, maybe more, and then still put in a bigger divergence, and then maybe come on down there. Maybe not. Remember, I'm still longer to intermediate term bullish on the metals, and I'm not super high convictions. And this is again little minor zigzagging stuff. This was a big divergent low. I don't think this is the end of the run. To me, it's more a matter: are we going to come on down here and then go up, or is that it right now? As I'm doing the video. This is again a live chart. The other one was from this morning, and this one right there. So all right, so that's it. So I think we bounce here. You can jump in and game another leg up, put a stop below the recent low, and then the last and other one that again, I should have just thrown them out with them, cut and pasted all this stuff off here. But gold, negative divergence, continue to build with gold trading around the top of my 1784 to 1792 target/resistance zone. That's this right here. Remember, this was highlighted here. Resistance or target zone is when you have two, or what I refer to as having two resistance levels in close proximity. So you can either target the bottom or the top. I could coin toss whether you're going to reverse, and so that's it. So we had that, and then this is what I was looking for, and this is why I'm doing the video now, because we're there. Minimum pullback target would be a back test of the downtrend line. So you can see there was divergence. And so this is it. So, let me give you the live chart. Again, that was before the hour and a half before the market opened. Here we go, gold. close, not there yet, and that's hopefully by the time I get this video out. If you want to take a shot, I think there's a tradable bounce to be made. I'm going to zoom in a little bit. So there it was. So we went a hair higher from where I screenshotted that this morning. There's the correction, and we're coming back to back test this trend line. Problem with back testing trend lines is it can come in at lower and lower levels, but there's also some pretty decent support there as well. So this is what, yeah, I favor at least a tradable bounce off there, and quite possibly more, and maybe up to that next target there at 1824. That's what I'm favoring right there. And one of the reasons, the only other chart, and this is where I stopped because I was about to get into, again, I wanted to get out and do some things this morning, but I was looking at the euro as well, which I remain bullish on, cautiously bullish. Still the potential for a major bottom. We need a little more work to be done, but remember the euro's been grinding around this trading range right here, and what I'm showing you is E7, the euro futures. I'm going to show you that other EUR USD chart in a second that I've been showing you more so recently, but there's an uptrend line right there. There is, see that reaction high, and then we broke above it, reaction low, reaction low. There's decent support there, about 101.73, and this is again E7 Euro futures 60-minute chart, and so I think the euro is going to bounce here, probably run up back to the top of the trading range. You could trade it raw, trade the euro itself, or just trade silver and gold because they follow the euro. It's not mere coincidence you had this drop in the euro. It's not mere coincidence you were at resistance. Again, this is why sometimes my analysis gets so detailed, because I don't just look at gold, I don't just look at silver or platinum, palladium, I look at the euro, look at the US dollar, and everything else there. And so that's it. So end of story. We're no guarantees. I will say this: if we break that level and we break the levels below on gold and silver and everything like that I'm showing you, then we are probably going lower. But I favor at least a bounce, and I think there's a good chance we can come up to the top of the trading range and then ultimately break out above it and hit my next target at 104.28. So yep, that's it. So objective long entries here, or re-entries on the precious metals. And then last but not least on the euro, and then I'll get to gold and crude oil and natural gas, but let me show you EUR USD. This is the chart I've been showing you lately, 60-minute chart as well. So it's basically the same thing. We were just looking at euro futures. This is the euro US dollar, and the charts are going to mirror each other. There's that trading range. Well, just to back it up here, so we had a divergent low, aka positive, aka bullish divergence, T1 / first target / resistance zone. We hit it there, pulled back. Then we set up in this big, or not big, relatively for a forex pair, but a little trading range. And again, we are at the bottom of that T1 zone. I haven't changed this level. That was always and still is 101.580. And so that's it. That's support. Now there's next support level is the bottom of the boxed in trading range. So I'm going to give you that number now. So I think there's minimal downside in the euro before we bounce. And remember, euro goes down, gold and silver go up. They're positively correlated. They both move down together. I meant to say it's the dollar. When this is falling, when the euro's falling, it's a euro going against the dollar. So that's the euro dropping, the dollar rising, and so that's what I'm looking for here. So we still haven't hit my preferred swing target T2. Still maintain that. And we get that up. That should take gold, silver, everything else to the next levels that I just showed you. For example, in gold, should take us up to that 1825 level. Silver, whatever else the next resistance level was, and so forth and so on. Okay, two more and we'll wrap it up. I'm just sticking to the usual suspects right now in this video. Natural gas, hourly chart. Pointed out that buying climax a week or two ago, and nothing more to add other than we've been stair-stepping lower, zigzagging, boom, 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 boom. That's the near-term downtrend, lower highs and lower lows. No signs of a bottom yet. We're getting a little bit of divergence there, forming on the PPO, but not on the RSI. We're making lower lows, so staying with that one short for now. I do expect a reaction when we hit this 7409 target support right there. At that point, probably get a tradable bounce, but we did take out recently this secondary uptrend line. Remember, we had the first uptrend line here, then that secondary uptrend line, which really gives us that price channel. went in for back test, and so a little more, at least a little more downside for now there. And last but not least, crude oil. Let me give you a quick update there. It's kind of just floundering around. When the market had a little strength last couple of days. Well, I should say was holding up, wasn't really going down. So we had crude doing the same thing, kind of consolidating, and it's holding above this 90-11 support slash target, which was hit there. We hit it, bounced, but remember we came back and we back tested. Remember this trend line I told you at first? That's where we shorted it last. Then I went on to say, you could use a stop above, a little bit above there. I said that 98.83 level. It was ever so slightly popped, and we were going up again. I said, you know what? I kind of have a feeling I'm going to give it room, stick with my short, because I suspect this is going to prove to be a false breakout, and it was so far. We failed back down below the trend line, and then just back tested it today. Next sell signal comes on a break below 92.11. And remember, I don't only trade off the 60-minute charts. That might be all I cover sometimes in these videos, but when I look at the bigger picture of crude oil, this is CL, same thing, crude futures, but on a daily chart, year and a half of price history, ginormous, big, bearish rising wedge, complete with negative divergences. One of my favorites. Breakdown, back test, moving lower. And there's a pretty good support about $92. When 92 goes, I think it'll be a swift ride down to 85.50, and then ultimately about 81 or so right there. That's it. All right, guys. And then same thing. No change for me on. I didn't cover it or mention it before, but I will. No change on Ethereum. Still short that one as well. The big major downtrend line right there. Negative divergence, and slowly rolling over like the stock market. And again, just like the stock market, looking for a little more pullback, a little more downside, and then there's a beautiful level to cover. You want to cover just above that 1320 level, and or reverse long for a bounce if the charts confirm. So that's it. And look, don't get married to a trade. Some of them play out, some don't. A breakout above the trend line in that 1720 level, anything more than just a brief whipsaw is going to be bullish and could take us up to the next level there. That's most likely going to occur if the stock market can shrug off these divergences and power on through and break through the recent highs from last Friday and yesterday, and start rallying from there. So certainly a possibility. Momentum in the near term for last at least 2 months now has been clearly bullish. So set your stops accordingly, or I should say this, and I don't think I need to tell you, don't trade crypto if you are somewhat risk averse. It's the swings in this dwarf what you get in the stock market. This is almost like trading natural gas. You're going to have big moves, so if you're going to trade it, keep your position sizes commensurate with the expected gain and loss potential on this. All right, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.